And you can see from the chart, this is the Aussie yen, and it's the same setup that we have seen in the euro yen, and it's the same setup as we have seen in the so if you look from last week, our structure selling point was the 82.87, so that was your first short on last week on the 14th. The second short, second structure break was the 79.43, so you would have taken it again, and it took you all the way from 82 to 74.50. You had about 900 pips on that break from the structure point. And guys, as I was telling you in the beginning of the session, these are the trades that we sit and wait for. These are the trades when everybody out there is scared to get in because they think it is insane. And I'm using that again, so then this is our golden time. Because we are the only ones that can understand what is going on. We can identify the direction, and the most importantly, why do you think these guys are scared? Why do you think they call it insane? I'm asking you all a question. Why do you think that? Anybody can guess? Exactly, but in addition to that, again, one more point, they are unable to identify the risk, guys. They don't know where they go out. They cannot, exactly, they cannot interpret where will I get out if I'm wrong, where if the market is going to turn. Exactly, all of these are brilliant reasons, guys, but the key, the number one thing is, they don't know where to get out of the trade. They cannot identify the risk. So all of you guys here, this was our structural point on from last week. You would have went short below 79.43. You wouldn't care, Joe, about the panic. You enjoy the panic. The panic is what makes you money, guys. Panic of everybody else, not your panic. Everybody else's panic is what makes us money. Once we trade below 79.43, now you know that they are panicking, but the difference is you know that your risk is up to 79.43. If it gets above that, thanks, Joe. I know. I just wanted to clarify for everybody else. I know you're with us, you know. Now you are identify your risk and you can get out. And that's what sets us apart from everybody else. All of us here in the room as traders is that we know our risk. We can calculate our risk. We can identify our exit point. And if you know your exit, if you know where you're going out, and if you know your risk, the odds of getting hurt is very, very, very slim. Okay, so right now, again, we are above the structure point of 79.43, so we want to be buyers, but it is trading now at 81, at 80.29, so there is no reason for us, let me see the structure point just exactly to 79.43, so we don't want to go short. And again, one of the nice things about price behavior, guys, let me show you this. See here, when it broke the 79.43, it took you where? To 76.15. This is the second time it broke it took you pretty close to the 76. The third time, it took you way beyond the 76. The fourth time, again to the 76 and beyond. The fifth time to the 76. So if you have now a typical behavior that every time or 80% of the time it breaks below the 79.43, it takes you to the 76, then you can understand now, oops. now that once it breaks below the 79.43, it is going to take you to the 76. So in this case, you know your exit now is above the 79.43. You know that it will take you at least 300-400 pips. Then there is no panic in our heads. There is only conformity, and we know exactly which way we are trading. All right. So we are now going to. We are only going to short it below 79.43. Let's see our radar screen from last week. And these are the actually, if you were short. For example, from last week, somebody was asking the trade. You see that my selling point last week was 82.70.87, and my short was the 82.87, and the structural stop was this. Therefore, if you took it from 82, you had at least 800 pips on that trade from last week. That's why it is so powerful when you have your selling point and the structural point one and the same or close to each other. Okay, so let's see. So we're going to put our selling point 79.43. This is here is our selling point, and we also have a 3-day low over here, which is the 79.26. So to be on the safe side, we are going to sell below the 79. I don't want to mix you up. I'll leave it the 79 first. So my selling point is the 79.43, and it is also my structural short. And if I go short below the 79.43, then my stop is going to be the 79.43 also. And if I'm going to be a buyer now, I have to identify my entry points to buy. We can buy it above 80.73, so this is going to be our buy signal. Above the 81.70, and if we buy it above the 81.70, this is as low as it got, so we're going to place our stop right here. This is my long stop around 80.10. I'm gonna put it at 80.10. Okay, so my buying point is 80.73. $80.73, and my stop is below, long stop is 81.10. I'm sorry. All right. So this is the Aussie yen. We're going to go along above 80.73. Our stop is 80.10, and my structure long is the now this 82.87 now. I'm sorry. My structure long is the 82.87, and we will only go short below the 79.43, which is also a structural point, and it is also our stop. Okay? All right, fantastic, guys. All right, so this is the Aussie yen. Let's take a 5-minute break. What do you mean, Kamal? You did you take the Aussie yen short from 82.87? Well done, man. Well done. Okay, let's take a 5-minute break. We'll have a cup of coffee, something, and we'll come back and finish the rest of the test. Okay, let's take a 5-minute break.